One of the big pieces of news that our group has been talking about the last couple of days here has been the Palantir news and the inclusion in the S&P 500. So I'm almost wondering here, can I get your opinion on that? And then furthermore, do you see a trade that could be set up off that?
Absolutely. So if you remember way back when we were talking about this particular stock, I said, it looks great, but the chains are so quiet and huge spread. Now have a look at what's happened to these chains in terms of open interest and volume. It's exploded, absolutely exploded. And so that's given us a chance to really trade this in a way that might make really good sense. So the question is, when a stock moves into the S&P, of course, there's a lot of forced buying as portfolios that model this have to increase into the position. So there's going to be a burst of buying, but then it's going to try and settle out. Now, we know that this chart has got a lot of upswing. And the last time we were together, I said, hey, this resistance zone, we even drew it out. So for those of us that remember, it's a measured move. We go right up here and look at where it tops out.
Amazing. At the top of the measured move, almost like you planned that.
Yes, the market plans it for sure. And so now we have to think, if we want to get involved here, what's the best bet? And my thought is a short put spread. Now, you might say, gosh, Emery, that just doesn't feel exciting. So boring to have a short put spread. And I say, yes, it is, depending on your time frame. What we expect is a burst of enthusiasm. Just the earnings just rocketed, pulled back. Take a look at this from a weekly perspective. It's already tested old resistance, new support over from the earnings. It breaks out for 2 weeks, collapses into the breakout of the earnings week, and now it's gapped up because of this news. It is in a favorable space. So the thought process is, how do we get involved and not expose ourselves to a dramatic amount of risk? And that's why we look at the short put spread. Now, why? Maybe we want to be able to buy it at a certain price, or maybe we just want to spread out just a little bit. And so there are a couple of things we could do. We are going to look at, first of all, the short put spread. If we look at 30, it doesn't give us really anything for October. It's just 59 cents, okay? So if we want to think to ourselves, last time we were on, I was on with you and James, and he's putting this in my kid's account because it's just going to be rock star good. It's going to be that good. So you could do a couple of things, all right? Here's a backdrop on options. Short or put side options normally run cheaper than call side options. Call sides are normally more expensive than put sides. And so we have a tendency to collect a little bit more premium if we're on a call side, and then less premium if we're on a put side. So let's say we go to November and we sell the 30-25 put spread, and it gives us $1.02. So that's about 20%. And I like to use a minimum of 20% of a credit if we're looking at a vertical. And so why is this a nice thing? Because we've got upside action, right? The short put spread, which gives us a positive skew, meaning The more it rises, the more profit we can collect. And so that upside pressure, we're trading on the same side of the trade. Now, since the call sides are so much more expensive, we actually could go all the way to, see, they're here at 40. So let's go down to 41. We could also sell a call spread at the 41, maybe 44. Okay, and that gives us a little bit more credit. We've got ourselves an iron condor.